Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. One of the hottest solar energy stocks over really the last half decade has been Enphase Energy. And the company has grown on the back of a lot of jurisdictions mandating the kind of products that it makes, module level power electronics, but it's also become the brains of a lot of solar systems. That has been a massive tailwind for the company, but that's starting to come to an end in 23 in kind of interesting ways. The second quarter 2023 results that were released last week were really solid in hindsight, but looking forward, they're a little bit more challenging. So I want to dig into exactly what happened, what we should think about it as investors. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. If you enjoy this video, check out my newsletter, Asymmetric Investing, in the show notes for more content like this. And I want to start with the earnings release. This is the second quarter release. The most recent numbers here are on the left, and I'm going to focus on GAAP numbers, but you can see that everything is really pretty good. $711 million in revenue, gross margin 45.5%. That's incredibly impressive for a product company, and actually rising year over year. Operating expenses are up, but you would expect that as the company grows. Operating income and net income up big. Net income actually more than doubled in the quarter. Diluted earnings per share of 109. So everything is looking really good if we look in hindsight for Enphase Energy. But the stock actually dropped this week. So what's the reason for that? Well, remember a couple of numbers here. $711 million in revenue. This is for the second quarter. This should be a pretty good quarter for a solar company. Warmer temperatures, especially in the northern hemisphere, you can install more solar. The third quarter should also be pretty good. But if we go down here to guidance, revenue guidance for the third quarter of 2023, only $550 to $600 million. Gross margin is also going to fall to between 41 and 44%. So there's actually going to be a fair amount of pressure on the top line specifically. So what exactly is driving that? Management got into that during the conference call. Now there's a lot of context here, but I want to pull out a couple of different quotes. One is the CEO saying, now let's discuss the market trends we're seeing in the US, split by California and the rest of the US. For non-California states, the Q2 sell-through of microinverters was 6% lower as compared to Q1 and 11% down year on year. So sell-through is basically how many end customers are actually buying microinverters. Enphase is oftentimes selling through some sort of distributor or installer. And so they're talking about how many actual installations are happening. In California, there was actually a rush to install product before the end of net energy metering 2.0. This is something that we've seen across the industry. So they're basically filling the channel then again in the second quarter. But if we go to what's going on overall, the sell-through rate in the first half of in both Q1 and Q2 was approximately 20% below the fourth quarter due to high interest rate environment in the US. Our sell into the channel was only 10% down. End customer demand is down 20%, but sell into the channel was down 10%. That means inventory was building in the solar industry. As a result, the inventory is going to have to correct, and that's why you see the weak guidance for the third quarter that will likely extend into the fourth quarter, which is obviously a winter quarter here in North America. There are often ebbs and flows in demand for solar installations, particularly in the residential and commercial market, which is where Enphase sells most of its product. And right now, some policy changes, particularly in California, are actually a headwind for the company. And you've seen that end market demand is actually down year over year. This is something that the entire industry is actually dealing with. It's harder to finance projects when interest rates go up. That means you have to charge customers a higher rate for the electricity that they're producing. If you're going to finance that project yourself, if they're building the project with a loan, obviously the higher interest rate means that loan is higher cost. So higher interest rates are naturally going to be a headwind for the entire industry overall. We've seen this from installers. Now we're seeing it from Enphase Energy. So not a big surprise that end market demand is down. I think the ultimate concern here is that, does this give a chance for competitors to catch up? Competition has been coming for the microinverter market and inverter market in general for quite a while, but hasn't really gained a lot of steam. Customers are very comfortable with Enphase Energy's products, but this may actually put pressure on installers to reduce their costs. And that focus on costs is something that I'm concerned is going to lead to lower margins, lower growth, and actually the rise of competitors. We have seen this before over and over again in the solar industry. Having better technology in solar panels in the early 2010s didn't last because lower cost products came into the market. that ended up taking market share and eventually got better from a performance and technology standpoint. Could we see the same thing happen with microinverters, with power optimizers, with string inverters? I think that's likely to be the case. The electricity market often moves towards commodity margins, and Enphase has really avoided that for quite a while. Had a lot of tailwinds behind the company, but now it seems like the headwinds are coming at Enphase Energy. Revenue is starting to go down. Margins may be going down as well. So keep an eye on this as an investor. I don't have a position in Enphase Energy, but this has always been one I've kind of been uncomfortable with because it's so expensive. And the challenge, if you're paying a high price for a stock, high price to sales, price to earnings multiple, is that if something goes wrong, the stock can drop like a rock. That's exactly what we're seeing in Enphase Energy. So I would be very cautious taking a long position in this one. But what did you think of the results? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.